Good afternoon, everyone, and welcome back to our series on Discover the Future. We are back for another episode, this one specifically on Discover the Future of the Canadian private markets, revolutionizing investing across borders. Today, we have myself, Lorel Scott. I am the co-founder and COO of StartupStarter and the host of 2022 Equity Crowdfunding Week. And then we have Chris Lustrino, the man who's getting ready to have a baby. He is the founder and the CEO of KingsCrowd. And we have Rebecca Kacaba. She is the CEO of DealMaker. And then Peter Paul Van Hoeken, founder and CEO of FrontFundr. How's everybody doing?
Yeah, Peter, Paul, and I are packing up our t-shirts and shorts to come down to LA to see you guys.
Yeah,
That's right.
you guys don't get much
Warming up.
opportunity. Yeah, it's really nice in LA. It's weird because we have this weird like cold fronts that keep coming through, and so we've been going through, making sure and crossing our fingers like we better have good weather because part of this conference is outside. So anyway, I mean, it'll all be fine. Well, I'm excited to have this conversation with the both of you. Last year, you guys both were on the conference, and so I wanted to make sure that we talk about cross-border listings and how that is translating from the U.S. and North America, Canada, doing these different things and listings together. And both of you guys have amazing insight, so like we can jump in and we can just kind of create some dialogue around it. What I would like to do is for you guys to individually quickly introduce yourselves, let the audience know who you are and kind of what each one of your companies are about.
All right, thanks, Laurel. Great to be here. Great to be here with such great market participants like Chris and Peter Paul. Always appreciate being invited to these things. My name's Rebecca Kacaba. I'm CEO and co-founder of DealMaker, a technology platform for hosting online private placements digitally. Marquee deal we did last year would be the Green Bay Packers, help them set up their online store and raise $65 million for their new stadium.
Top that, Peter. What you got?
There you go. So my name is Peter Paul Van Hoeken, founder and CEO of FrontFundr. FrontFundr is Canada's leading investment crowdfunding platform. So connecting startups, scale-ups, and other private companies with the wider investor community, with the public. We're operating from coast to coast in Canada. I've done now over 120 campaigns and transacted altogether over 180 million through our platform.
Yeah, so founder and CEO of KingsCrowd, and we essentially sit on top of this universe that Rebecca and Peter are building, and we essentially provide kind of the data and the investment research that folks need to make informed investment decisions in this very vast, growing online private market sphere that we're all in.
Great. And then I'm with StartupStarter, and we are on a quest to democratize entrepreneurship. At our core, we are a business education learning platform trying to democratize entrepreneurship across many communities, and on top of that, also our marginalized individuals. So we'll jump into some of those conversations as well. I'll kick it off. So, we have really been enthralled into equity crowdfunding over the years. It's grown so much over the last couple of years, right? So, Peter and Rebecca, like for people who don't know or have not been introduced directly to equity crowdfunding, how do you explain it to them? How do you explain it at a ground level so that they can understand that this is another form of raising capital, and why should someone actually raise capital through equity crowdfunding?
Yeah, happy to jump in on that. We would call it a community round, and so that's ability for someone to raise capital by building their brand and the community all wrapped into one big package. So it's allowing them to monetize a community that they may already have in a new and exciting way, and leverage folks like Peter Paul as well to embrace and build that community.
Rebecca highlighted what it can bring for companies and really leveraging your community and building out a community. And actually for the community itself, it's an opportunity for everyone basically to invest in early stage companies that traditionally retail investors have been locked out from investing in, right? So imagine that you can invest in a startup from the very beginning for as little as literally $100 to become a co-owner. So just as we've seen that the retail investors are obviously enter the public markets, investment crowdfunding is actually doing the similar thing, but then really for private companies. And so it's really an opportunity for investors to participate in relatively small amounts or bigger amounts if they want, and get early at the table, invest in promising startups.
Yeah, I think it's really exciting because I think it's a very unique opportunity just to change the game for investing. I think that the more that we make people aware that equity crowdfunding exists, right? It's been around for a long time, but there's still so many people, and so many people I just walk up to and they ask me what I'm doing, what I do, and I talk to them about equity crowdfunding week, and they go like, well, what is equity crowdfunding? And there's so many people that don't know, and I think that that's kind of the direction, especially with why we put this together, is to like really flip it on its head. More people need to know that they have access now to invest in the next unicorn, the Airbnb, right, the Apples of the world. They can invest in that and have a stake in this company for when it goes public, creating more generational wealth across all borders, right? What I also would like to kind of, have you guys both talk about as well, like you both participated last year in 2021 Equity Crowdfunding Week, which was a virtual conference, obviously because of COVID. During and since that time, there's been so many companies that have raised a lot of money through equity crowdfunding, right? The Green Bay Packers have raised, and that is like people not actually being able to touch products or see products. You have the Boxables of the world, you have the Apteras of the world that people have invested in, but they have not been able to touch it. Well, how do you guys attribute COVID and like the contribution that it has had in the surge of equity crowdfunding and people actually being able to raise these different community rounds in the US and Canada?
Yeah, I think the pandemic did some really interesting things, got people a lot more comfortable with using digital means and with online communication. And so that led to exponential growth as people were spending more time online and wanting to find things to do there. And so that's been really exciting for us in terms of us being in a space that was already skyrocketing and then having more people just see it and get access to it because they were online.
Yeah, and to add to that, for companies, and when it sort of COVID happened, I think like all of us were sort of stunned, like what's happening, and but fairly quickly realized like, hey, we're actually really well positioned as an online platform, already fully digitized the entire process to carry on. In fact, there's no other way to actually raise capital. Companies typically would organize investor events in person. All of that it was all off the table, right? So for companies, it was actually an opportunity to continue raising capital. And so we definitely seen a significant spike in the number of listings, and also to Rebecca's point, in interest from investors. So we've seen, of course, how they also huge increase on signups on public market platforms, and I think we've seen the same in the private markets. So that's really exciting to see, and it's sort of expedited, I would say, the growth of opening up the private markets to retail investors.
Do you guys think that it really gave a huge bump, right? COVID actually gave a huge bump in the companies that were actually getting invested in because they couldn't actually see these companies in person, so they were kind of forced to look at these companies online?
I think as a space, it was already growing, and so it accelerated the movement and poured more gas on the fire on that space. I think that's not to say that traditional methods are going to go away. They're always going to exist, and they're going to pivot and grow as well. But the benefits, which we can talk about a little more deeply, to equity crowdfunding, with the work that Chris does and that you do, like in bringing that broader message, more companies are seeing this as a viable opportunity for them to really use this as a method of fundraising that gives them different advantages that other types of capital raising just don't give them.
I'd love to hear a little bit, obviously we're seeing major growth in our industry. A lot more people are becoming aware of it, which frankly is like number one to making this thing really work. But let's talk about the advantages of raising capital from the general public through equity crowdfunding platforms over going the traditional route of venture capital and private equity. And it's not to say that it's a either or, right? You can do both. But what are some of the unique advantages of going this direction?
Yeah, I mean, first off, you're absolutely right, Chris, that they're not mutually exclusive, right? In fact, I personally am a strong believer in that they can perfectly well go together. So the key benefit of actually opening up your capital raise to a community, and it's exciting to see that traditional investors like VCs and angels and start to appreciate really, like, certainly if it's a consumer good, if it's impact investing, if it's certain purpose-driven companies, where it makes a lot of sense to spread the word and get as many people in as possible. So it's really an opportunity for companies to first of all tap an entirely new pool of capital, which is obviously huge. It's the pool of investment assets from the public, and secondly, there's a whole point about mobilizing community. Think of companies that perhaps may already have thousands of customers buying their products. So they're already in. So what if you go to those customers and say, hey, we're growing, you're already a valued customer, here's an opportunity to actually help us grow and share in the potential upside, right? So that whole idea to mobilize people that already believe in you is really powerful. And on top of that, it's a great opportunity to combine raising capital with a marketing exercise around your company and your products and services.
Yeah, and then to build on that point, like ideally at the time that you go public, you've got a really loyal base of followers, right? You also are in a different position when you're setting your valuation. It's more of a company-driven exercise versus having someone across the table set that valuation for you. But maybe someone is setting that valuation for you. One of the exciting developments we're seeing in the space is a lot more VCs or different types of funding arms or angel groups using this kind of capital raising as part of their strategy to help the companies build the company. We have lots of clients who got key contracts from the community that invested in their round or key introductions. And so part of the work that we're doing in the solutions we're building out at DealMaker is to give companies the ability to keep up those communications with their community because they can continue to get help from their community in building the company. And I think, Lorel, that really goes to what you guys are all about in terms of democratization and the impacts that democratization can have on the way companies are built.
No, I love that. And I think that kind of goes to my next question, which is, having this opportunity to raise capital from the community, we're definitely seeing some demographic shifts. We're seeing some geographic shifts of where capital is being raised. And you talk a little bit about what it does by enabling people to raise capital from their own communities rather than having to rely on closed network VCs where they just might not have access to.
For a lot of companies, certainly earlier stage startups, many of them are even too early for VCs, right? So the problem that we're addressing with basically providing these companies access to a new pool of capital is really to address that funding gap, if you like. Founders put perhaps some of their own money in, family, friends, perhaps a few angels, but where do they go next? There are many of them are too early for VCs. So really to be able to tap into your community at that stage is really a benefit, of course, to raise capital. And then as you grow, you can obviously further mobilize the community and expand it and use investment crowdfunding as sort of the way of raising capital, perhaps concurrently with other sources, as you grow the company.
Yeah, and I think that community point, like you raise different geographies, Chris, which is an interesting observation we have as well, right? We have a horse racing company that is a very niche thing. But what the internet does is allow community building across geographies. So horse racing is exciting to people in a variety of different states in the US, and suddenly you can create a meaningful capital raise from those communities who that company speaks to. And so as we take this mission globally, our goal is to really connect those communities regardless of where in the world they sit, because inherently a lot of people I've spoken to in Brazil have the exact same ideas as people in the US or people in Canada do about the power of community capital raising. It's really exciting to see how people in such different countries can really have the same thesis and the same idea about how this can work.
It's mainstream. We have to make it go mainstream. How do we do that, right? We have to touch the communities. We have to touch the organizations. We have to touch the big banks who actually touch the mainstream, right? There's a lot of things that we really keep in the industry. We keep in equity crowdfunding, right? There's a lot of the same investors on this newsletter as it is on FrontFundr or on DealMakers, right? We're crossing that. But how do we get to my mom, my sister, my friends who don't know? How do we get to them, right? And it's having these conversations globally, right? And regulations too, right? There's so much that goes behind getting this done. But I think that we're making the right strides. And I think, again, that's why we're here and we really want to do this. Okay, so for my next question, I'm gonna split this up a little bit, right? So I'm gonna ask this one directly to Rebecca, right? I've been able to follow you ever since I met you last year. And specifically, I know as a female CEO running a very successful corporation, you advocate for minority and female founders raising capital. We know that the vast majority of these individuals lack the amount of funding and the amount of access. Why is it more important now than ever to change the narrative, both when it comes to venture capital, and how do you believe equity crowdfunding opens the door to more access to these marginalized communities for capital?
Yeah, well, I think some of the really exciting statistics we've seen that Chris has published have done that for this space, right? Because we've seen, 2% of VC funding going to females and minorities, whereas in equity crowdfunding, you're looking at like 15 to 30%. So that's a material difference in the types of founders that are getting funded. And that's really exciting to me. But I think it almost goes back to your last comment about how do we make this more mainstream. I think one of the trends that we're seeing that's going to make it more mainstream is impact investing, and that's being driven by millennials. And so will the older generations ever come in and decide they want to be impact investors? Maybe not, but there are a lot of younger generations that are, and they're using equity crowdfunding to push their message forward and really vote with their dollars in terms of, not choosing to donate via charity, but choosing to make impactful investments and support the type of corporations with the type of missions that they want to see in the world. And so it's these really cutting edge trends that have found their way to equity capital raising, which is really exciting for us to be a part of this movement.
It's exciting for me. I having the conversation and being able to share this information with people is what really gets me excited, because if they don't know, it's like now, like, oh wow, like wait, I didn't know this existed. Like how do I get to do that, right? And so a lot of it is, again, it's around the conversation of education and access. How do we educate people on this being a viable way to raise capital faster than necessarily raising capital through the normal traditional ways, to also giving them the access and education all in one, bottled in. So my next question for you, Rebecca, is, in your perspective, why is providing this education and access of this form of capital so important to a startup in the private markets and these companies, even more so than for our underrepresented female founders and our more minority marginalized founders as well?
I think it brings knowledge to the space, right? If somebody's going to embark on a capital raise, that's a really time consuming and it's a big commitment.
Yeah.
And so the first thing that we find, because we are speaking more to issuers, maybe Peter Paul can talk about the investor facing side. But for us, the issuers really want to know that they're going to be successful at this and that they're not wasting their time and energy. And sometimes, a lot of the time they don't realize that, hey, if you work with investment bankers or if you're trying to get VC funding, there's no guarantees there either. A lot of companies go out and spend a lot of time trying to get VC funding and end up with $0, right? So the more that we can show them the path and give them the right tools so that they can be successful in this, we're just going to get more companies funded better, faster, cheaper, which is our mission, to really bring cutting edge technology to the space that allows for bigger raises, more efficient raises. That's going to get more entrepreneurs funded at the end of the day.
In general, on both sides of the marketplace, Rebecca highlighted what it means for entrepreneurs and gives for, it's more creating more inclusivity basically, and the same thing is happening on the investor side. And Laura, you mentioned about all the advocacy and education it needs, and it does, to create awareness. When I speak to people, most people obviously have not heard yet even the opportunity or the possibility that you can invest in startups, right? So the conference and all the work that you're doing and the company's doing in this space is all creating that awareness. At some point, more and more people have invested and make multiple investments and start sharing in the networks, and that obviously takes time. But if you look at, for example, in the UK, where the whole investment crowdfunding kicked off around 5 years earlier than here in North America, so around 2010, about 40% of startups there actually raise fully or use crowdfunding as an additional source of raising capital, right? So it's really went mainstream, and more and more people are familiar with investing in private markets over there as they are already in the public market. So it takes time, but it creates really this accessibility and exclusivity also for investors. You know, typically you have to really write bigger checks to even be at the table to invest in real estate companies, and now you can create a portfolio of 20 companies for not even $10,000, for example. So that's really what it does on the investor side as well.
With all of these different changes, right? I think that we're constantly getting new investors on board. I think that we're also getting a lot more VC actually like coming away from that archaic view of how capital raising should be. We're getting more and more of them involved. What I would want to ask you specifically, Peter, is, you know, as Canada's leading equity crowdfunding platform, what is the biggest impact you feel you are making for emerging startups in North America to connect more of those companies to investors, and then also those cross-border listings that a lot of the companies on your platform do as well?
Yeah, so first off, for companies here in Canada, it's obviously where we started. It's what I mentioned early on. It's basically offering an alternative avenue for them to explore to raise capital. And for some companies, it's a great way to raise capital through investment crowdfunding. For others, it's could be more challenging. And then again, we talked about impact investing. Rebecca mentioned that. That's typically people like to see more of that. They can vote with their investment dollars, and so the same for CPG, the consumer products. Those kind of companies, easy to understand, easy to explain to investors. And we've seen successes here in Canada, but obviously we're operating in a North American market. And so we see more and more companies and also investors that like to operate on both sides of the border, right? So we see companies here in Canada that want to open up their capital raise for U.S. investors as well as vice versa. So yeah, we have the first experiences with actually cross-listing capital raisers on FrontFundr to open it up for Canadian investors, and on the US-based platform to open it up for US investors. So it's definitely something that's happening right now, and it's obviously also sort of accelerated by the regulation that we have in place. Favorite topic really, but we have finally rules in place here in Canada only since September 2021, where they harmonized crowdfunding rules here in Canada, same as of course in the US with regulation crowdfunding and Reg A rules. So we definitely, I see a role for us to help companies essentially maximize exposure to a potential investment.
Peter Paul, can you talk a little bit more about how that works? So if you're a Canada-based company and you want to raise in North America, you want to raise in the United States and you're in Canada, what do they need to do? Do they need to fill out any additional paperwork with you? Do they have to go list on a different platform? Are they able to do all of that through FrontFundr? How does that work?
So, and without getting all the weeds, there's definitely a bit more paperwork, as you say. The thing is that the regulators basically say, hey, let's help companies get better access to capital from the public without burdening them with a lot of paperwork. Okay, so what the regulators did in both the US and Canada introduced these crowdfunding rules. So the regulation crowdfunding in the US, and here in Canada it's called the startup crowdfunding exemption. So exemption meaning from filing prospectus. But they're basically saying to use those rules, so if you want to use that crowdfunding rule in Canada, you have to be a Canadian resident company, and it's the same for using regulation crowdfunding in the US. So to use those crowdfunding rules cross-border is challenging because you can't really use them on both sides. But there are opportunities, and I know that Rebecca is also working with lots of companies using this Reg A in the US, and what they can then do is sort of what's called use an offering memorandum here in Canada. And this is called an OM wrapper, so they sort of wrap it around the Reg A, and then you can open it up for investors in Canada as well. So in answer to your question, Chris, there's definitely a bit more paperwork. What I just explained is something you wouldn't do if you're looking to raise a few $1 million. It's just too expensive to get it all in place. You also need typically all the financial statements, that kind of thing. But if you're raising 5-10 million, north of that, then it's interesting to use those existing rules and open it up on both sides of the border.
Got it. That makes a lot of sense. And I'll turn this to you, Rebecca. What do you think can be done better on Canadian regulation, even U.S. regulation, to make it easier to do these kind of cross-border investments and allow people on both sides of the border to be able to invest more effectively?
Well, one thing I'd love to see the equity crowdfunding exemptions in Canada, the limit come up. I think that would drive more issuers to use that exemption. But I think we've streamlined it pretty well so that you set up portals on DealMaker in different regions where you want to raise. So of course there's all the complexities that Peter Paul kind of walked you through, but I think, that's our mission, is to make that as easy as possible for companies that are doing it to go through that process.
Just to add that in Europe, actually, they just recently introduced, European crowdfunding rules, right? So truly creating sort of removing all barriers in terms of different rules. It probably will take a while here, but even if they coordinate and more sort of simplify rules and increase investment limits, Rebecca mentioned that rightly so, is that in Canada we just came from a $250,000 maximum per raise and now to 1.5 per 12 months period, 1.5 million Canadian, that is. And in the US, of course, regulation crowdfunding is now at 5 million. So definitely want to indeed see those limits in Canada go up.
Yeah, in the US, Jobs Act 4.0, would love to see any of that come into effect. I think that could have massive impact for our space, whether it be, the rules around databases of people that shouldn't be involved, so that the background checks we're running become much more smoother and streamlined, and onboarding is just that little bit much easier. There's all kinds of really golden nuggets in Jobs Act 4.0 that will introduce more streamlined processes to the space that will in turn drive more traffic to it.
I'll tell you guys what I want to see. What I would love to see, if there's a way for regulations to make this happen, I think this will be a game changer for the entire industry, because we can invest. When I start a new job, I can invest, and my company allows me to invest in 401k through TD Ameritrade or TransUnion, right? Transamerica, sorry. Wouldn't it not be cool that if I can onboard to my new company and I can invest inside my company's portal into equity crowdfunding campaigns at my job, right? So now you've reached the masses of every single person, because you have the ADP of the world, right? You have Trinet of the world, and now they have all these different companies and startups who actually are raising equity crowdfunding. Now those companies should be able to be looked at, and I can invest my 5%, right, based on the US regulation, my 5% directly through the company that I work for. Wouldn't that not be a game changer?
Totally.
Absolutely.
That would open up a whole new pool of capital for companies, which would be incredible.
Yeah.
We're going to get it passed. Go ahead, Peter.
Actually, on that note, and it would definitely be a game changer. We recently kicked off a partnership, which we're still probably going to announce with the premier Canadian communications company, with a lot of employees. And basically they had the idea and said, hey, they obviously help young companies, and they have accelerators, incubators, and to basically get them, particularly companies where they can create synergies with their own corporation. So they came to the idea, well, why don't we open this up to our own employees? And so that was the idea. Of these startups to open it up for their employees, and so they needed a platform infrastructure to do that, and they also wanted to make sure that these deals were looked at by a third party. And FrontFundr operates as a registered so-called exempt market dealer here in Canada, which is kind of in a way comparable to a broker dealer in the US. So each deal goes through our screening, and then we basically place it on the platform. And this is the corporation's, let's say, private deal room that they can open up for their own employees and say, hey, you can invest in the companies that we are actually supporting as well and working with.
That actually leads right into my next question for you guys, right? It's perfect segue. So so much is changing. It's happening really fast. We asked this question to all of the other series guests on for Discover the Future. So, what do you guys believe the impact on online investing will be in the next 10 years? All right, we currently see an increase in raising capital through the private markets. Do you guys feel there will be a point when we see either a decline, and what would it take for equity crowdfunding to completely change the way we raise capital globally? What do you guys think?
I think we broader are going to see a greater global impact. And I think 10 years down the road, you're going to see the not to make a pun, but the impact of impact investing really starting to have changes in communities. And that's going to drive even more attention into the space, right? Because you're going to have the opportunity, Peter Paul mentioned, the little portfolio that someone can build for under $10,000. Now they've had an exit. Now they've put that money to work. Now we've launched a case study. Now other people see the benefit of that. And that just is going to drive more growth in the community. So I think the trend has long been up and to the right. And occasionally you see little dips in that activity, which is the same in any part of the capital markets. But the trend has overwhelmingly been up and to the right and will continue to be so. It's like the internet continuing to impact online shopping, right? The internet's not going to stop impacting capital raising.
I concur. I think it's definitely we're clearly onto something, and I think that it's obviously a lot with we talked about raising capital from communities, leveraging existing communities, building out communities. We're all talking about networking effects, right? And creating global communities, as Rebecca mentioned. So with network effects, at some point it becomes like a snowball, and it gets accelerated growth and acceptance as well of this. I mean, we talked about how much advocacy and explanation we have to do on both sides for both capital raises, how this works, and also for investors that this is even possible. Like, yes, you can invest and you don't need to be an angel, and so we're getting to that point, and I feel like now that we have the regulators with us, and we get sort of more and more traction, that we're at this inflection point, and then I can really see it, the trend go exponentially up, and so that's going to take time, but I feel like we're at that sort of turning point now.
Yeah, it sounds like we need to get the UN involved, the United Nations, to pass something for just all the global countries can just do equity crowdfunding together.
Yeah, I love that idea. But I think that network effect is so important, and that work that you, Laurel, and Chris are doing in bringing the message to the broader masses, we're so thankful for, because it makes our lives so much easier when we can have people come to us that want to use our software, that already know about equity crowdfunding because of the work that you guys are both doing. So thank you for that.
Thank you.
Absolutely. We're working together.
Yeah, I mean, we'll keep doing it. I mean, there's so much that to be had that we can work on, and for the biggest disconnect, right? What do you guys believe is the biggest disconnect in equity crowdfunding into to making this go mainstream, right? Both in Canada, in the U.S., like. We've seen that crypto, blockchain, digital assets, collectibles, right? Which we have all these companies a part of it. There's all a unique role that they play that's very much similar in an aspect. But like, how do we make it go mainstream? Like, what is the biggest thing that needs to happen?
One of the sort of disconnect or stigmas, if you like, is that certainly in the early days, investment crowdfunding was seen as something, as sort of a last resort kind of thing. Like, you can't raise money anywhere else, and you turn to investment crowdfunding. And that's also how traditional investors sort of looked at it, like, where's this going? Is this a good idea that everybody starts investing in this? And I think we definitely seen a change there. I'm really experiencing now, when you speak with people in the market, that they start to recognize, like, hey, this is actually an opportunity. This is concurrent to, let's say, existing funding sources, and also that all participants in the market, including traditional investors like angel VCs, start to appreciate that actually, hey, this certainly for a CPG company or impact investing company we talked about, makes a lot of sense to actually open it up for the wider community. So that if you like, a disconnect is definitely, that stigma is, I think we're getting rid of that, and then it comes down to what you said, like then it comes down to spreading the word and really creating an understanding and trust as well, confidence. Is that's really a key point. And for example, on the FrontFundr platform, the last 12 months, about 46% of the investment volume is actually coming through existing investors, which is really exciting to see, because that means that they basically start coming back and start buying into it. And obviously, the more touch points you have with the platform, or the more investments you make an investor, as an investor, the more likely you are, of course, to also talk about it and spread it in your, share it in your communities. And I think that's really where we're heading, and we're moving that sort of disconnect and let's say perhaps misunderstanding of what it is and what it is not.
You have a cool platform, Peter. So, like, do you think that plays a unique role, right? So we have the Start Engines of the world, we have the WeFunders, the Republics of the world. Do you think it's also the quality of the deals, or like the quality of the way the experience is that keeps these investors coming back?
The quality of the deals. I mean, that it's definitely, certainly as we build this market. Like on one hand, we talk about regulation, want regulation to be harmonized and easier, and maybe some of us don't want any regulation at all. But it probably makes sense that there are some sort of regs and rules that you need to stick to. And certainly, if you build a market where you're inviting new investors to the table that may have never invested before. So in answer to your question,
Right.
creating that trust and screening companies, and that is what we do before we admit the companies on FrontFundr is just to make sure, not whether we say this is a winner and everybody should invest. We're not even allowed to say that, but to basically sort of do a due diligence, screen the companies, and make sure that we believe, okay, these companies are fundable, they're ready to fund, they have everything in place. We do due diligence, and that creates trust, and that creates sort of a curated marketplace of companies that are sort of ready to raise, and where the risks are really around the business itself and market, but shouldn't be around companies just ill prepared or that kind of thing. So I think that curation of successes with quality companies, evidenced by companies that also have an exit and are bought by larger companies or go public, that certainly is a proof of concept. And on that latter, we also have a few companies that now made that exit and where investors truly, generated a return on their investment.
Chris, so you're kind of on the other side of it, right? So with KingsCrowd, like you're seeing these companies, you're seeing the metrics, you're seeing all these different things as you're publishing it onto the KingsCrowd platform. What do you see it attributing to? Is it the quality of the deals that we're seeing, or is it the where they're coming from, where they're housed? What does that look like from KingsCrowd's perspective?
Yeah, I think it's like anything. We're dealing with financial services here, and you could talk about the crypto world and say, well, that blew up really fast, so financial services can change quickly. And I don't think that's right. I think crypto was more just a craze. Not that it's going anywhere, but the fact is, it blew up because it became mainstream by having a lot of excitement around it for not necessarily the best reasons, right? And it got run up for not necessarily the best reasons. In our space, people have been a lot more thoughtful. We've had a lot less, we've had next to zero fraud issues or anything like that. This market has taken the right steps to build a really strong foundation and an industry that's actually trusted. But getting people to go from investing in stocks and bonds to now investing in startups they've never heard of is a huge leap, and it takes time. It takes hearing that their friends are doing it, having their financial advisors recommend it, understanding what the return profiles look like, all of these things that just weren't established and little by little are occurring. And we're just seeing there's just this growing awareness that's occurring over time. And as more companies do this, and then they bring in friends and family, and those friends and family hear about it and they become interested in the space, it's just little by little snowballing, and it's getting bigger and bigger and bigger. So we're experiencing the compounding effect of this industry having a staying power and becoming more well known. And so little by little, the number of investors is increasing, the dollar amounts going into these deals is increasing, and the number of companies coming in to raise capital is increasing. All the factors are moving in the right direction. But I imagine, you're going to look at a curve of this market, and it's going to be like this, and then it's just going to completely inflect as you have that right number of investors and companies all coming together at that right moment in time. I still think we're 3 to 5 years away from really just seeing this thing absolutely take off and kind of dominate the traditional venture markets.
I love it. I love it. I mean, you said one key thing in there that really I think that we need in equity crowdfunding, and it's excitement, right? Which I'm telling you, we're gonna bring you guys the excitement this year for equity crowdfunding. We have the awards, which are sponsored by KingsCrowd. Rebecca DealMaker is a sponsor again for the second year. She keeps on coming in and really just believing in what we do. And Peter, you coming back too. We really appreciate you guys being a part of this. So my last question, and then we'll wrap it up. My last question I want to hear from all of you is since this is your second year participating and being a sponsor of the Equity Crowdfunding Week, this year is even bigger. It's more exciting. We have more things going on. We have actually an actual conference in place. We have an exhibition trade show in place. We have an awards show in place. We have a pitch competition in place. Like, we're also giving away $5,000. So if you want to pitch at Equity Crowdfunding Week, go and do that. But what are you guys excited about? What is the most exciting for you guys about attending equity crowdfunding this week? Your company being a part of it, and what are you guys looking to get out of it the most?
I'm excited about the panel that Peter, Paul, and I will be doing, but also excited just to be in person with everyone. And we're so big on innovation. We love hearing ideas. This is how innovation happens, when you put us all in a room together and everyone gets to share ideas and really take this thing to the next level.
Yeah, I think, as Rebecca mentioned, we're doing all this advocacy and explaining how it all works, and so and we know how much hard work that is to come together in person again is great with the people in the industry, and we're all on the sort of the same mission. So I'm looking forward to that. And the other thing I'm excited about is, you mentioned it, Laura, you need to create excitement in the market. You need, if you often when I speak to our customers, and whether they're capital raisers or the investors, say, you are the change makers. Like, it's not necessarily us. We're obviously spreading. We facilitate it, but you need people to buy into this, right? So have to be on this conference. And to meet a lot of people, and to get people excited about what's happening here, and opportunity to invest in companies, and how it helps companies, how it helps investors. That's great. That's how you get that snowball that Chris was mentioning. It all adds up to get that rolling and make it bigger and bigger.
Yeah, I mean, for us, if you guys notice, if you look at the branding and how like distinct our team is with branding, we want equity crowdfunding to be sexy. Equity crowdfunding is not sexy right now. How do we make it sexy? How do we make it hip? How do we make it cool, right? Because if we're talking about a new era of investors, which are millennials, like, they gotta understand, like, oh, this shit is cool. Like, how do I get involved in this? And so that's like the path that we take. Because if it's like you're sitting in a millennial to just a platform that's just kind of like, okay, what am I doing here? What is this? It's not cool like crypto, right? So how do we make it cool like crypto? How do we make it cool like blockchain and Coinbase, that like everyone's so excited about, like scan a QR code, which is why we have the NFT wallet for everyone and all the exhibitors at the conference. You guys will all have your own cool NFT, and people will be able to like just tap your booth and be able to download and drop it right into their wallet that we've created. So it's really cool. Chris, what about you? What are you excited about?
Yeah, I think just getting to bring together everyone that you've met on Zoom for 2.5 years. It's always fun to chat with all of you, but to actually get to be in person and have the entire industry come together under one roof is a really unique experience, and something that's really good for all of us as well.
Yeah, I'm excited. I've talked to you. I've never met any of you in person. It's crazy. Like, now I get the opportunity to. So, last words, anyone? What's next for DealMaker, FrontFundr, KingsCrowd? KingsCrowd and StartupStarter, we've been talking about some really cool things together in just terms of like the editorial space, and I would love to hear what's up next for you guys as well.
Yeah, what you can expect from DealMaker: continued innovation, more products and packages to service our clients, keep our issuers raising better, faster, cheaper.
And for us, for FrontFundr, it's about continuing on the path we are, growing that snowball, doing more deals, and getting more and more investors on the platform, and also to basically open up or increase their engagement and really drive repeat investments and help them truly create portfolios in the private markets.
Great. Well, listen, Rebecca and Peter, I look forward to seeing you guys in T minus 2.5 weeks. Very excited. I can't wait to show you guys what we've put together, and we'll just continue to make an impact. And however we can help you guys, and we all help each other, I think this is what's going to help grow this community. So we're all a community, we're all a crowd. So equity crowdfunding. So thank you. Thank you everyone for listening, and we'll be back with another episode series here soon. So take care.